Okay, how are we going, guys? How are you, Bobby? Hope we're doing well, mate. So it looks like people are a bit slower to get into there today. So we see how many we get in today. We're probably fixated on the market at the moment. Struggled today, isn't it? Been watching the market there, Bobby. We had a bit of a blast up on the open, and then boom, we've been selling off since. So interesting. It's interesting how it's played, the intraday sort of price action on the markets, well, on our markets anyway. So, all right, let's just get stuck into it. I can't. We'll just see if people can jump in as we go. All right, welcome. Welcome to Trade Setup. It's the, what have we got there, 10th of May. So the year's ticking along quite nicely. Um, it's getting on a bit fast. You don't sort of, you blink and you got a few months gone. So we'll see if it continues on. It always seems to be on the back foot most of the time. But we'll see how we go. Just watching that market edge lower. So hoping it would actually, just look at the ASX200, hoping it would actually hold up in a bit of support, or find a bit of support, but we've pretty much opened up about 35, 40 points and been drifting lower since. So, all right, so today, what I want to take a look at, everyone's favourites, the banks. I'll have a bit of a focus on them. Obviously, we'll take a look at where the markets are at. And then I just want to just get into the banks and just pull them apart. I sent out an alert earlier on the sector itself, the financial sector. We know they've been coming under the pump a bit because of the Financial Royal Commission or whatever they call it, the fancy name they have for it. So the banks have been under the pump a bit. It's been a good part of, I think, about a year or so, just grinding lower. Um, Look, I'm not saying it's going up yet, but I think it's coming to an area where, on the banks anyway, the sector itself is coming to an area where it may start to build from here. It's going to take us some time, obviously. Don't forget when we're talking financial, especially the banks, the money making machines. So it just can't keep heading lower. And it's also, I guess, in saying that, I wouldn't be just jumping in and buying them because you think they're at a good price. But it's always about setups. Everything's about a setup because it's arrogant to think that you pick the bottom or pick the top. So without a setup, you're really just guessing. So we'll go through a few of those. Just break down. It's probably mainly the four big ones. If anyone's got a bank that they want to chuck in there now, we can have a look at that as well, like Bank of Queensland or Macquarie, strong as buggery. That one just ticking away. So that's good. We'll get into it now. Let me just minimize that. I'll fix my. Where are we going? I'll fix that, don't I? There we go. Just let me know if you can see the stream correctly there, Bobby. Is it all coming through nicely? All right, all good. Looks like we've got the main screen. Perfect. Right, so the Dow up strong last night. It's just that no one else went with them today. So we've got that there. If you look at the Dow, I think that's quite the weekly. So let's thicken that up. There we go. It's quite a good little chart. Banks on this. Yeah, it's a good question there, Bobby. We'll take a look at it, but I'm only sort of going. I mean, basically, I go off the charts, and you're looking at times that the amount of time it's done to consolidate, the amount of times it's moved down, so the length of time it's taken to do all that, and just try to extrapolate it out. But it really could just turn on a dime, or I think the good thing is, with the banks, bigger punters buy it, and they don't just buy it straight up. They'll be having to build up to a position or build into a position. They may have been building when it's grinding lower, edging in, and then start to really go to full size as it's turning around and heading back higher. But I don't think, I don't think it's going to be too much of a problem to try to. It's all about entries again, so we'll get into those. Could take weeks actually. Now what was I looking at? See how easily distracted I get. Let's get this chart up. I just want to focus on that. That's your Dow. All right. Let's get that. I'll change my colors and thickness. There we go. No, so that's the S&P, isn't it? So the S&P is one that's, I mean, that just remember that's a broader index. It may, we're getting up to that sort of zone just in here around the 27, where it could easily react and see where the stochastics are getting to overbought. The thing is, we didn't get down to retest that 25.50 zone. We really just washed out that, what was it, the low, say 25.10 to 12, 13, whatever it was. We pretty much moved south, and that was your two legs down, one, two, washed that out, then we pretty much recovered, took out that little minor lower high, and we're heading back up again. So it doesn't, there's going to be a, the US is coming to that point where the bigger S&P may just sort of grind a bit, grind lower and get a bit choppy, whereas the Dow could go on with it. I mean, if you look at the Dow chart, it's slightly different. Um, we're not coming to a potential resistance. I mean, this could mean absolutely nothing. If we trade up through that, we sort of touch on these highs. By the time we get there, it's going to be sort of breaking out of this contraction lower. And the good thing is I am seeing that top of that W pattern. I think Helen talks about it a bit. Davin likes the W and M patterns as a high low. So that's looking quite good for a push up through that minor lower high. It's around about 27.20 thereabouts. So I don't mind that price action. It's just if you go back to the weekly, I'm still expecting a bit of time to take. It could just sort of pop up to 28, then pull back, and then really start to consolidate, spend weeks really building for the next new move, potentially up through 20 into new highs anyway. But it's looking not too bad at all. If we go over to the Dow, you'll see what I'm talking about in the daily charts anyway. Where are we? Let's get our little drawing tool up. The Dow's slightly different. What's your views on the Dow? What's everyone's views on the Dow there, on the S&P? You can see that if you take it across the same sort of highs, you've got your, we nearly retested down here, but again, that's sort of your higher low that's starting to build. But you can see this has been choppier, not choppier, sorry. It's contracted a bit sharper, and we've just got this push with this move up, pushed up and out of this contraction, and we pull back to build your higher low, and we're pretty much on the rise. So I think we're going to come up to sort of around that 25,000 mark, might provide a bit of resistance. It may just start to chop, so you might get it just sort of range bound, ranging in between those highs and lows, and really just what it's going to do is just chop people around a bit before we start maybe starting to build and go. Again, that could take time, so I'd still be looking, just focusing more on those weekly charts just to see. I think we need capped at around that 25 for now. I mean, you can look at these rejections on the weekly bar. Look at this rejection. I mean, that was rejected, obviously. We had to go back down and test it. That was a serious test. That was buyers stepping up to the plate again there, starting to lift it. And then we're getting these last couple of weeks of being rejected of any push down. So that's not too bad at all. I like that price action. So just keep an eye on it. And it is getting, I mean, I like to look at the stochastics. We're starting to get up to, we're working our way up towards this lower high, but we're getting a bit extended to the upside. So that's suggesting to me we're not just going to blow through it in one foul swoop. I wouldn't think anyway. I'll be more inclined to think it's just going to get a bit choppy from here, but be more contained. I think we've put in that base around that 23, say 250. Yeah, 23,300 to 350. That base there, we're just working our way up off it now. So we may, I mean, from here, it's just where do we go to? Where do we fall short? And it's taking a bit of pressure to get it up here, and we're potentially falling short of that high there. If we do fall short of that and we build another minor lower high, what do we do from there? Have a bit of a pullback, build a higher low around 24 to 20, I don't know, 24,100 thereabouts, or 24,000, retest that low, and then start building from there. I mean, the stochastics are going to oscillate, but it's just the pressure. I mean, if it's taking a bit of pressure to push it up here and we can't quite get there, there's going to have to be a bit of heat come out of that market. And then from there, are they going to have another crack at it and build a high low? And every time it builds a high low, there's a bit more confidence coming back into the market. Whereas ours has gone gangbusters. Look at that. That we've spoken a few times. I like to look, I mean, obviously, I'm a big one to give me a bit of an idea of what's happening with the stochastics, going from oversold to overbought. Big leg, big strong leg up, and that's breaking out of that, that contraction lower. We've gone straight up into those highs pretty much today, was it? Touched on it today. And we've just backed off, and it probably makes a bit more sense, the intraday movement. We spiked up today. And if you look at the SPY wasn't looking too bad. That spiked up, the SPY futures overnight, went with the US, and that's been making, holding higher lows, making new highs, grinding higher. And this may be that we've just run headlong into a bit of resistance there. Potential resistance. That doesn't mean anything potentially until we break down through that. I'll have to get it off the chart. What's that? That low, 60.61. So that 60.60 area, we could just, from here, we run headlong into that resistance. No, say we got to here, had a minor pullback. We pushed up into that resistance. Up until that breaks, we could just go down, retest it, wash it out, hold a higher low, push back up, wash out the highs. We could get choppy between that level, but if we're holding up at that level, but just above that 60.61 zone, that's actually bullish for me, because I think if the market can't roll over from here, or we don't just sort of head south and start easing off and make them, a major high low, potentially around 59.50 or 6,000, who knows where. If we get this deeper correction, then we'd have to see how it goes, and it's going to take a bit of time to work out, get a bit of confidence back in the market, and then off we go. Otherwise, if it holds around those highs, it doesn't break that 60.60, that holds up, it's actually quite good. It means that the buying pressure is still there. People are buying on those minor pullbacks. They're happy to buy up at these higher levels, and what that could do is sucker in a few sellers, and they keep getting squeezed out. Sucker in a few sellers, they keep getting squeezed out, and then what you'll find is that once it starts to go, people are going to have to be chasing that higher, especially if we hold here, maybe for a few weeks, sort of chop around up here, and then hold a higher low, and we start extending through 61.50. People are going to be chasing it higher, and just and I think with the banks, that may playing well if banks start to hold and people start buying back into banks, and there's some longer term pressure into banks, or buying pressure anyway. So yeah, that's my little view on the ASX, but we'll see. But there's no reason just to, the last thing you want to do, and Dave and I were speaking about this, is to sit there and watch this go, it's overbought, it's overbought, it's overbought, and you can see, and you're purely not buying into a quality stock purely because you think the ASX is overbought. I mean, this, like I say, they can stay overbought for a long time. Look at this, when it was overbought, when we're trading up just below 59,000, chopped around here, and then boom, we went from 59 up to, what was the high? Another 150 points. Another 150 points rally on the ASX is pretty handy. So you don't want to just be sitting there thinking, oh, okay, we're overbought. And even it really after that capitulated here, but it kept holding those higher lows and kept grinding all the way up to 61.50. So if you were thinking it was overbought at that stage and you just held back from buying a good quality share, you could have been giving up quite a few gains. So I'm not saying load the boat. I'm saying obviously be careful, but keep an eye on this. For me, is just a minor level, but it's quite a significant level, this little 60.61. If we push down through there and then we try to have a go at it, and I don't mean just by touching on 60.61, because that's just a retest and then you can go on and blast up through 61.50. I'm assuming a deeper pullback, maybe 60.50, 60.30, 60.40, a deeper correction through it, break that where it's quite clear. And then from here, it might pop up, build a lower high, and then you get your deeper correction, like this type of scenario. All right, so just keep an eye out on those. We've come up into that significant level at 61.50, touched on it today. What was the actual high? 61.45. So you fell a tad short. What was the highs there? 61.50, bang on. 61.45. So about 5 points shy of that. We could close up into that level by the end of the day. It's not looking too bright at the moment. We're holding lower highs intraday on the 30-minute. You look at the 30-minute chart or the 5-minute chart. So I keep an eye on those just to see if that flow is changing. But no, it's not. It's still holding the lower highs there. All right, let's get into. I want to get into, was it the sector? Any questions just on that? I guess we don't really need to look at the FTSE. Not much to say there. Still kicking on strong. DAX, a bit of the same. That's looking quite strong, especially after doing all this work cleaning out a lot of traders. And you can see this this move here, it's probably better to see on the daily, where we've got this chop through these previous high low. That all that's really done is just squeezed out a lot of people. So anyone that's probably got stops under there, that they're thinking, okay, we bought it in here, whatever we bought it up here, and they've probably put a longer term stop under there. Go, I'm going to get out. Just 1 second here, guys. There you go. Sorry, that's my little daughter. She's watching YouTube. Be quiet, Livy, okay? All right, so what we were saying, so that this price action just squeezed them out. It's gone back up. It's squeezed them out, and then we've turned around and just retraced and taken out these lower highs. So that's actually quite significant on the DAX. We'll see how that plays out going forward, but it could just get a bit. Again, I don't like with the US. My biggest concern is that what's happening over there. I mean, not so much the news. What happened was Trump, and he bangs on about Iran, and what we've had the China trade issues, and there's been a few things he's been pushing out. The fundamentals is that growth is good over there, but growth may be crimped with a rise in bonds. Bond prices are rising, interest rates are rising, the cost of debt is rising. Again, corporate profits, have they peaked? If they've peaked, is it worth jumping in at these levels? So there's all these sorts of issues which I think could cap the market for a while. Whether or not there's a big sell-off, I think that's going to be a bit of a, looking at the S&P. I mean, it could easily blast through here and you get a deeper correction and then start to reset as a lot of heat comes out of this market. But I think what we're seeing here, there is this shock down and this next shock from the 28. It's cleaned out a few people. I mean, just purely the fear, everyone running for the doors. It didn't get too far whether it was held up again. So we'll have to see. I think it's more the story in the US. The US has really gone on with it, gone quite hard. If there is at grind lower in the US, as long as it's not that fear factor, which drives us lower, I don't think we're going to get, we're going to capitulate as much as say the DAX. Sorry, not the DAX, the S&P or the Dow. Where are we on the weekly? We've blasted up if this becomes a double top, and hopefully it doesn't. And we might still get that choppy price action, but this trend is still holding up. And at the last higher low was at around that 57.20 mark. What are we at? 57.25, 24. So it's still holding that longer term trend up. So even though the US might have a deeper correction, we could easily just pull back to 59 as they have a deeper correction and then start to hold. They bounce, we bounce up and through into new highs, through 61.50. As they bounce, they build a lower high. We have a pullback, build a higher low after that. That sort of thing can happen. It doesn't potentially mean that we're in any dire state. All right, let's rip into the banks before I get too carried away. It's easy for me to get carried away. Any questions there, guys? Or Bobby? All right. First things first, I might just chuck this a bit smaller. I want to show you this is the financial sector. So firstly, we'll just take a quick look at the financial sector. Just 1 second there, guys. Just be one tick. All right, sorry, just had to fix something. So yeah, onto the financial sector. I would sort of look at this high more of a zone, not so much a lower high, and that's a major zone. We're talking, well, I know it's 200 points, but in context of this move back, within a few percent is probably good, and that's probably within the 5% mark of this overall move up, just falling short of the the highs around 72, probably got somewhere around 70. Sorry, 7,200, got to 70 or 7,000. So it only fell short a bit. But what I like is, just say you're getting this kind of support. I'll probably do it a bit cleaner. This sort of support coming in, and you can see that really the angle of that descent there from the highs, which had blasted off into the highs, 72,000, 7,200. And it's quite savage. These moves down were quite savage. And you can see you're probably about 40% retracement of that move down. It's less than 50, just eyeballing that. And then it had another good move down. This was a bit of a deeper correction. It tried to go again, then it had a third move down right back into that sort of support zone. So we found that support around that 54. Now the angle of descent from here has been a bit more contained. You can see that it's been a bit, for me, a bit more contained. And you can see that the pressure, the pressure down here, okay, that was fair enough. We had a good little bounce and it was around 62. Tried to go down again, but it was bought up off 62 again, and they had to have that deeper sort of a pullback, just wash out those highs before we started heading south again. But we've only come back into this 6,000, which found support around that 6,000 mark again, just off this rising support zone. All right. So you can just see that the angle of descent, as the angle of descent reduces, if that makes sense. So this is reducing compared to this angle of descent there. So the selling is quite hard there. The selling pressure is either, if it's just as hard, it's getting soaked up. There's more buyers starting to step in on this move down, on this grind down. Right, so that's for me. And we get into that point of contraction where you've got lower highs coming in with this major support of 6,000. We may just chop around as we contract a bit further, but sooner or later that's going to come to a point where it's going to break either up or break down. All right, and I'm sort of the main reason why I'm accepting that it could bounce up or break up is that, one, you look at all the major banks that we'll look at in a second, they're all getting overextended on the downside. So for them to break down and continue on with some strength, I don't think I wouldn't like to see them in an oversold territory anyway. And we're actually oversold in here too. So if this buying pressure starts to push it up, if we if we get to that sort of overbought territory and we're at 64, then you might expect a bit of a pullback, and then you're just going through the same motion, going from overbought, so to overbought to oversold to overbought to oversold on the stochastics. But we can easily just do this time of price action, where there's more, the next time down, there's more buyers stepping in, and the next time up, there's still some selling pressure there, but starting to abate, and then you're really just looking for that, which ways, the setup. And if we're heading south, I'm looking for this type of thing. I'm looking for the breakout after we break out a contraction. But if we don't, if we sort of pull back, I really should make that a bit cleaner, shouldn't we? All right. So we've got our contraction here. The market's really just going up, down, up, down, up. Where are we? So we're down about here. If, for instance, the two setups I would look for is a breakdown, there may be a pullback, and then you've got your potential sell setup here. As the banks start capitulating more, it's breaking this major trend line. Okay, or from here we push up, we break up and out, and then you're looking for your setup high or low. Not so much, I guess, just on this to trade, not so much to trade the financials. This could just grind up from here and just sort of go up, pull back, all the way back up to 7,000. But either way, then you'd be looking to your banks for the setups. Right? I'm biased to the upside. I'm biased to push up out of contraction because the banks, going through this Royal Commission, not just the banks, but the financial sector, there's financial planners that are coming under fire. I think we've seen the worst of it. If Paul's in now, he'll probably give a better explanation of where we're at with it. But I think we've seen the worst of it. I think a lot of it's been factored in. Commonwealth Bank come out and just bang, hit the whole lot in one hit. Okay, here's all our bad news. Go and digest it. And while everyone's away digesting it, it's probably a better thing to do than just, if you edge a bit out, you say we've done this wrong, there's a sell-off, and then people don't want to go jump in and start buying it. And if they do buy it and it starts ticking up again, then they come out with more bad news, and you get a deeper sell-off, and then everyone's going to be a bit more tentative to buy again. So I think it's actually quite a good thing. The Commonwealth Bank just come out and went bang, here it is, all in one hit, and then the market may have reacted. I think it actually did head south, and then it's just sort of been hovering now because they're just digesting everything they said. And they say, okay, if that's everything, we factored it into the price, and then you want to see it can start lift. Price can. This is the monthly here. Look at this type of price. And actually, if you just go I'm guessing they've all got a very similar type of price structure. You look at the, it's probably hard to say, just say we've had a big run up, big correction. This is your secondary move up on the monthly, a decent correction here. And the angle of descent was quite sharp there. We did bounce quite a bit. You got that initial push down in, or whatever month that was, at the start of 2017. But then the angle of descent here, it's just starting to ease off. Maybe it's a bit like this type of price action where you tried to go. We had to have that deeper correction before we started to lift from there. We've had that one move down, pop up, secondary move down. So I'm always liking to see those two legs down. So that the initial buying, when you get this big sell off, the initial buying here, it couldn't lift. They've all been squeezed back out again. And it's only just taken out the lows. It's probably easier going to the weekly. This move down, we've only just taken out these lows slightly on ANZ, and we're starting to lift. Okay, we're just starting to lift the last couple of days. And even if you drop it down one, that little minor double bottom has led to this lift. It doesn't mean we were overextended on the daily, but what I'd be looking for, I would prefer to see it go on a bit more, then pull back and start to spend some time, a few weeks, building a higher low potentially, and then grinding a bit. But you want to see it break out of that contraction lower, and then start to lift. And if we go to here, that's better. Yeah, it could be just running up for, like you said, John, XDiv. It's the overall. I don't think it's going to move. You're looking at mainly the weekly charts. The divs are going to move it too much, as in it's going to get a sell off into the divs. But I'm still looking. It's sort of this price action I like. That solid sell off there, and then we've got this a good little run up here, and that's your swing high. Then we started to drop off. If this is really weak, you'd expect it to be down here. Instead, we've got this kind of action here. We've just washed out those, well, draw that a bit better. Really just taking out those lows, not a significant amount before we started to lift. So what I'd be watching carefully is more this sort of, I want to see it break up and out, break up and out, and then I want to see a high low build. And again, we're looking at the weekly chart. I want to see that high low build above, or around that 26 mark, say somewhere around 27 to 20, 28, 27.50. Doesn't matter where it is, but I just want to, in context of that 26, I'd like to see it a higher low build. I mean, don't forget, just remember, if we push up into this, so we have that a little bit more extension in the next couple of days or weeks, pop up, and we only touch on that resistance before we start rolling over, and then we start building a high low. For me, it's a tougher one to take because it could just be a suck in a few buys and then roll over and just touch on and squeeze them back out again. I wouldn't want to see that. So that's why I'm always liking to see that little pop up and out of contraction. Potentially something like this, we popped up here, pulled back. It took a while to get going here before you got these little higher lows. We could just consolidate through here, say ANZ. Just remember, it's probably the same through ANZ, BHP, Westpac, Commonwealth Bank, NAB. They're probably all very similar. I think they are very similar, except Commonwealth Bank's had a bit more of an aggressive sell-off down to some major support zone. So that's what I'm looking for here, and it's mainly due to, if we go back to the week, I'd like to see this type of price action. Grind lower, holding higher lows, maybe that pullback, you get a little entry, and you can get an entry if you can see just these couple of red candles before a good sell-off. After push up, good sell-off, held a higher low, tried to go again, and then bang, just reversed, and that led to a new leg up, and that continued leg up. I'd love to see that, and that's why I'm thinking we're into oversold back here before we bounced. More selling come in. We went to oversold, selling pressure come in until it breaks that contraction lower. That selling pressure can keep going. They could rally from here to 50%, go back down to oversold, and it could just keep making new lows and grind lower. So that's why you wouldn't want to just jump in here thinking, all right, we're ready to go, ready to rock and roll. Financial sector is looking okay. We're getting through the Royal Commission. Let's just buy on the bid. Let's just sit there, put our bid at 27.50, say, pulls back to 27.50. Okay, we're long. We have a stop at, if you have a stop at 26. We could just go grind straight through 27.50, straight through 26, hit 25.50, and then to make a new low, bounce back up, lower high, and then you could just constantly get stopped out. Or if you don't run a stop on it, you could just be sitting there. This could technically, it could start to roll over and test all the way down to 22s. Nothing to say it won't pull up. It's just, I think the sector itself is in the oversold territory. And these are all mainly your banks, ANZ. If you look at NAB, we've got NAB. Yep. Similar type of scenario. We had a good sell off here, a bounce. We built that lower high, but then it's been grindy. When you see this grindy kind of action, especially in two stages, it's not too bad. I don't mind it. And you can see we're going to that oversold territory, um, looking to hold up quite nicely. Probably the intraday action's a bit this intraday action, sorry, the daily action's a bit messier, so it's going to be a tougher one. But it's mainly that weaker action there. Sorry, the weekly action. Does that make sense, guys? And I wouldn't say buy just yet. I'm still looking for the seller. The setup. But what I'd be looking for is that high low. I want to see evidence, and evidence for me is a high low, whether it's a spike lower, high low. You might get it on the weekly and get this set up on the daily, but you're looking for that weekly high low to start building, and ideally on, say, on NAB, I would like to see a push up. What's that? 30.64, a push up to there, at least a retest, or just maybe a little wash out of that level. Then if you get a pullback and it starts start to step in at higher levels, at a higher low, whether it's this kind of a high low or it's a bit more controlled, that would be ideal. Then it looks like we're starting to turn this buying. We're starting to see some more buyers flow in, and then you just want to see how it goes into this resistance zone at 33, then up towards 34, and then the next leg really is right up to the highs at 38, 39. Westpac, I think, Westpac's a bit different. Westpac and CBA, Westpac's looking a bit less. Probably wouldn't step into Westpac, to be honest. That, to me, it has to hold up here. Otherwise, this could just boom. I wouldn't want to see that just completely, capitulate from here. Let's just draw that. It's be interesting to see on Westpac. Keep an eye on that. What do we got? Yeah, so it's at a sort of that zone. If you're doing, the buying zone here, last time it lifted was from where it is pretty much right now, and it's come back down into it. We've come back down again in two legs down, rather than just a straight sell-off. When you see this kind of sell-off, which really doesn't get a move up, you can make that's one big sell-off there. I know you can split into a few little legs, but when I'm talking, what I define two is when you get a pop-up, high, low, I'll draw that, high, low, and then it goes a bit deeper, and then bang, just turns around and goes down. I'm talking that two legs rather than just that sort of action. I hope that makes sense, guys. Anyway, but with Westpac, we've come down into that zone, so it really does need a hold up here for me. We are into sort of oversold territory too. We've got sort of confluence of two different support, that rising support here, and sort of that main buying zone, which was around 20s, probably 28, I guess. Where are we? About 28 lows, 27.50, 28. Sort of that zone through here. If it doesn't hold here, I'd be steering clear of that completely, because it could just completely blast through 27.50 and then just get a decent sell-off, and then from there you'd have to, I think it's going to take a long time to sort of recover. That's Westpac. And CBA. CBA is a tough one. There's no real, we've had a good sell-off here, and it started to recover. See this price action in here? It's conducive of just what we've been talking about, say on, was it NAB? Was this? No, it's a monthly. We got this sell-off here, and then it's a bit more choppy, a bit more, not controlled, but it's not as steep. If you go to CBA in here, so we've got that a decent sell-off, a good bounce, and then it was a bit more controlled, and that led to a good rally. The market would have been oversold in here, had a secondary leg down. You've got divergence, the way you want to look at it. The market's made a lower low, but the stochastics are actually a higher low, and then it led to a nice little rally. It's just that 70 zone really has to hold up on CBA. I guess there's no real need to draw it up there, but it's that quite clear, zone through around that $70 mark. Um, 69 to 70. I'm looking at, Bobby, when you're talking about, I don't like this. I wouldn't put a hard and fast price on it, like 69.50 or 69.46 or 69 even. It's, for me, it's a zone. It could be, and that's taken into account. What are these lows? Low of 69.22. So we touched down there. That low was, say, just above 70. So it's more that zone through 70. And the reason I like to say zone, because wouldn't I wouldn't just sit there and buy on the bid. If it's coming down into a, you might have a zone through here. It could pull short here. It could go straight through. It could fall short here. Sorry, it could do anyway. But either way, what I'm looking for that high low to build. Maybe a little contraction there, but I'm looking for those higher lows. And those higher lows for me, it's evidence that I'm correct in saying, I'm correct in assuming that we're going to hold up, whether it's 69, hold up off 69, hold up off 70, 69.50. It doesn't matter to me as long as we're getting those higher lows off that zone. All right. But either way, I mean, even if you do, I mean, if it holds the higher lows and it just pushes up to 82, it's a decent little trade off that. Even if we go from oversold to overbought, we push back up, selling pressure, buying pressure. We only fall short around whatever that is. Let's just go and have a look. Highs somewhere around 81, 82. It's not really 82.50, is it? Yeah, say 82. Just this sign here. If we push up there, that's a good. I reckon you can get a few bucks out of it. 5, 6, $7 out of it. Even as long as we get that high low, and then from there, if it just when you get up there, I'm expecting that to. I mean, we may grind up there. We may retest there, pull back, and build a major higher low. If we get that major higher low, then I think CBA is ready to blast up and through. And don't forget the longer term. When people are looking at banks, you're looking at funds buying it. They're not looking at what I will probably look at a few days, a few weeks. They're looking at months. And so I think they're longer term. And they would take your bigger traders, your bigger position traders or whatever would take months. They could take months to buy. They might take weeks to buy. I think weeks would be quite slow for them. Sorry, quite quick. But I think they're going to take a long time to buy. So their outlook is a lot longer. And if you're looking at the outlook for the banks, if all else remains the same, they've got through the worst of it with the Royal Commission. By then they would have anyway. They paid their fines, they paid their dues. And say you start looking at interest rate rises. Interest rate rises mean anyone that has got an unsecured loan, that just means more income. So they're going to keep growing, and they're money making machines, don't forget. Um, so I do expect them to, over the longer term, to continue that grind higher. It's just where do we go through from here? Is this the bottom we're putting in now? Or, is CBA going to go through here? We blast through support, maybe retest, and then start to have to build a base at a higher level, at a lower level, 60, below 70 even. Anyway, I hope that makes sense, guys. But yeah, I thought it was worth talking about the banks because they've had a tough time. We had got a little pop not long ago. This little spike up here, and we're still grinding into that 70 zone on CBA. Intraday on the Westpac's done a lot better. They've kicked higher the last few days, a few weeks, off 28. NABs, and look at this. Just look at the last few days too. It's all been quite controlled. It pushes down, opens a bit up, pushes down, opens up a bit, pushes down. So each day you can pretty much through the last few, if we make them a bit thicker, it's opened, within the previous day's range roughly, middle of the range, headed south, middle of the range, headed south, up towards the highs of the previous day, headed south. So I think that's a bit more controlled than, I'm not convinced that that's heavy selling, that selling is going to, especially on what are we on NAB, that it's ready to blast through the lows. Does that make sense, guys? Well, let's rip into it. What's everyone else's views on the banks? Is anyone holding banks at the moment? Are we looking at buying banks? I'm not looking at buying banks. I don't like them, to be honest. I know there's a lot of people that do like the banks, like trading them. Potentially, I don't. I think there's better gains to be had elsewhere. But just looking at them for support on the overall ASX, it could be, if they come into that zone where there's going to be some buying over the longer term, we may have a bit of a pullback, or we might, like we said, if you go back to what we're talking about on the ASX, we could be holding around the highs. Might have a bit of a correction because we are getting a bit extended where we are. The banks might be the support we need, but we'll see. I think there's going to be some setups coming on the banks that might be worth for anyone that wants to put them in their portfolio. Um, Start looking for your high lows. Just keep them on the radar. I think they're in that zone where I'd expect some sort of buying to start coming in. All right, what do we want to look at, guys? Market's only up 10 at the moment. Not too flash. What do we got on the run here? Ours, Whitehaven's kicked up. Oh, good work. How you going on Westpac? It looked a bit tentative, didn't it? What am I on? I'm on the weekly, aren't I? Yeah. So even that, for my style of trading, what I like, I find it a bit tough to trade these banks. Even intraday, it might be a bit tougher. Great setups for what I look for. Maybe now, we might be coming in. And don't forget, just on Westpac, this little lower high here in that 29.62, we've just broken through that, straight off that level, straight off 28, or straight from that washout of 28, and pop straight back up again. So it'd be interesting if we do pull back and build a higher low. It might at least lead to some sort of deeper correction of this move down, whether we go to 31, 35. So it might be a little trade in that. Legend, great work. Any of you on ELX, LX, and NMT? No probs. What have we got on ELX? Yep, ELX. I'm on the weekly, wouldn't touch it just at the moment. And the daily, nothing on the daily. The one thing that's the one positive I'd see on that is the capitulation we've got here. And a lot of times the capitulation could be at the end of a trend lower, whereas you see, let's go to here. That sort of capitulation we saw here could be at the end of a trend, but on the daily, it's not showing any sign of halting that move down. You look at the weekly. Look, the weekly's only the only other thing you've had a good move down. We tried to go up here, and then we've got that secondary move down. So very, very least on this one, the LX, if you want to be a buyer, if you're looking to buy it, I think it's going to take a lot of time to work its way out of this. And a lot of these smaller ones too, don't forget that the rules can change quite. I mean, the rules I look at anyway can change quite easily. People just get jack of holding it, and they could keep grinding lower, and then they can go sideways for 1, 2, 3 years, depending on what they're doing. So then it comes down to fundamentals again to kick it off and start the trend higher. Then you get your technical traders jumping straight in when it starts to trend. Like here, spent nearly 2 years, probably we go back a bit, a couple of years. Say in here, 2014, even the end of 2014, sort of holding within a range here before we got this big, strong leg up. So do you really want to hold that for 2 years? If we get this sell off here, like we did here, then it starts to hold, starts to base out. That basing out could take a long time. So that's why I don't like to bang on it too much, but I think it's very important to have your setup a higher low. It just keeps you out of this rubbish. When if you're looking at this and you keep it on the radar, and it starts to break out, it starts to push up, and then you get your high low. Just trying to see. It was about here when we broke through this high at 47. We pushed up through 47 on this green candle, on that weekly candle in 1 week. The next week we sold off, but we held. If we can get that on a daily, I think it was somewhere around here. That was here. See this price that you could have bought it through here, and you're not taking a lot of risk. You could have bought it. See how we got this pullback here. It started to raise. Maybe on this secondary pullback, it was only minor, and that's a break up through highs of 51. You've got your risk below 48, you might have it at 45. It turned out really well. You probably could have come under a bit of pressure here, but that it led to a good little rally. And if you're just following it up from there, that rally could have turned out really nice. And that was on this leg up. So that was through this zone in here. Once it broke up and through those highs, you got this big correction, rejected, up, up, all the way. So that would have been a cracker. So that's just looking for that setup when you get a breakout of previous. It's just that consolidation. The last thing you want to get caught in is this consolidation through here. You know, it's looking, say if you're looking at this, okay, that's looking good, but it doesn't mean it can't just go off the highs, bang, straight back down again. And if you just sit there buying, anticipating, I don't like to anticipate anything. I like to be showing proof for me. I want to be showing proof by other traders. Let them do the hard work. Let them do the buying. Let them be wrong if it's going to be wrong. And if it comes back and it just continues within that range, I'll just look somewhere else to trade. You know, something else to trade that's going to give me, you know, it's that, I guess it's that drug addict mentality, that quick hit. I want the quick fix. I don't want to be sitting there waiting for it for too long. And that quick fix is when you get that push out, a pullback, and then we're looking to buy somewhere here when you're starting to rise again. We're looking for that's a weekly chart. We're looking for a daily setup to see if we can get that lift on the weekly. We're in nice and early. That initial push up through this high out of the contraction zone is a good heads up to other traders saying, hey, look, we're going to start doing something. Something's happening here. Do you want to buy in nice and early? Or do you want to wait for confirmation? I mean, even there, it turned out quite well. That setup on the weekly was nice. It turned out well. But still, you bought it nice and early. By the time you're up, I don't know, however many percent there, if you bought it at, say, 50, by the time it broke up through there, it was just below 90. You're like 40% on your trade when they're starting to get in and they're extra buying, starting to lift it for you. Yeah, I hope that makes sense. I've got sidetracked there, but either way, it's just bounced off this level. It's a minor level. That's not a significant level at all. All right, so whether we fall short or whether we've just capitulated there, whether we just do a bit of this, we can do up to 90. So that's that capitulation, say. I'll draw it better. So we've come down, had that little, and then we've just got bang, straight down. We could do this, rally back up, as long as we hold below that 90 zone, and then turn around and roll over and really start to capitulate again, take out 60 and so on. So for me, if you want to buy here, it's going to take a lot of work to do. I want to see it push up through 90. By then, you're probably breaking out of contraction. I want to see that. Even if it does that, I want to see it pop up potentially through 90, and then see if we can pull back and we can get our major high low and we get somewhere to buy into. So we know that the market is starting to rise. I hope that makes sense there, Bobby. Really got sidetracked. I'm easy to get sidetracked. This is ELX. What's the other one? NMT Neo. Look, my view, we're at the weekly. This is still a weekly. The daily doesn't look bad. I just don't like the way it's been grinding lower. And again, looking at this, to me, this is telling me the fundamentals are not too good. I don't know what's happening. So let's have a bit of a drink of coffee. No, that's not what I wanted. I wanted this. Here we go. So we've got, this is your weekly chart. I'm not a big fan when you see this sort of run up. We've got to 50 cents. That's your sort of your 2 legs down. That's a major corrective action here. Then you can see we started holding. Bit of a squeeze here. We broke out. If you took an entry through here, great. I don't like to see it go up into a zone, up into the highs, and then you can see this, bang, straight down again. I don't like to see that. To me, it's starting to turn more of a range trade. If it's a range trade, fine. You know, if we hold up above 25, but I think I'd want to see it touch down on 25. It's going to be that type of a range trade where you're going from bid to offer, or you might sell it up at the top and short it down to 27. And then you're just really oscillating between your buyers and your sellers, between that range. You're just trying to take some trades while it's doing that. That's your longer term. And that's if it was positive. If I wanted to buy, I want to see
this rally up met with strength at highs, not this secondary leg down. I would rather have seen this big leg up. You've got this little lower high. I want to see something like that hold up and buyers start to step in at higher prices. That to me is a nice strong, it's going to start a new leg high. It could go right up towards $1. And then you just measure this leg up and measure that out for the secondary leg up, maybe 70, 80 cents. Could have rallied up to there. It's just the way it's reacted off that zone, I don't like. So for me, yeah, either way, Bob, this is a weekly chart, don't forget. It doesn't mean there can't be a trade in it. And if you're going to break it down, you just have to keep in mind that it could struggle to push up towards 50. Not even that. I don't think there's a lot of fat in that. Because that's your main trend, that pullback, big correction, and you got your secondary move down. I mean, I don't know if that's the low there. I'm just trying to work off. Yeah, it's not quite yet. This could continue. It could take out, was it 23, 24, 28? Could take out that low at 29, if I get the number right. It could take that out and continue its move lower. This leg could continue. It hasn't quite finished yet, whereas we can see that's quite clear. We've got push up, pull back, high, low, took out. That was your anchor at that time. Only mildly took it out, only by a little bit. This little pop up here before we started a secondary move lower. So for me, there's not a lot working in its favor just yet. You need this level. For me, I'd need this level to hold up at 29. It could pop up, even if it pops up from here, you can call that a high low, pops up through 35. If you were looking to buy it there with a push up through 35, your stop would have to be somewhere around 30, and then it could come smack straight into resistance around 40 cents. So is it worth, what's that? That's turn out okay. You might get, so that's this push down. We've had that little pop up. We built that lower high. You've bought it essentially with a move up through here. Your stop's there. It could continue up, might get to 45. It may just go straight through. Don't know. If it doesn't, if it starts retracing off there, we might get it all the way back down to test, 31, 30 down to 29 before the longer term trend, the longer term buyers start kicking in. And you might have to sit through all this mess. Does that make sense? But for me, there's not a lot of fat. If I was going to trade just that entry, I want to see it go sideways, essentially go sideways. Why this trend essentially catches up to it, if that makes sense. I want to see there's some good buying, some solid buying. I want to see a retest of this low at 29 or 30. I want to see that retested. And then the whole time it's doing that, it's spending a lot of time, potentially days, weeks, chopping around in here. At the same time, this move down is starting to contract in. Buyers are stepping in. It hasn't broken up. And then you're looking for a good little high low to work off and to break up and out of contraction and just try to take that move up. Because once it breaks out of contraction, we're always looking for contraction going into expansion higher, or same on the short side. Contraction up, going into expansion down. Expansion down means it's starting to accelerate. You should be right pretty quickly if you've got the right setup and the right structure. You're looking at it correctly. If you don't get that sort of that quick fix, just reassess it. Just watch it. Anyway, what was the next one? John TAH Tabcore. All right. Again, it's a bit of that same. This good move up was met with some strong selling. If we go back and look, the weekly looks potentially horrible. I don't see, if I was just trading purely off a weekly chart. Let me just correct that. I don't. There's the one thing that's holding me. I mean, don't forget, we've got a clear zone through here. Even though it's spiked up quite, got up to 570, it's rejected that really hard. Even this pullback into the zone below 520, say, the little pop up to retest it, retest those highs through here with this little pop up, then bang, up, bang. It's just been sold down, and then you've got a clear sort of support zone just below $4. So again, we could just get rangy through in here. The one thing holding up on the weekly is that maybe this move we potentially come into a zone where we could build a higher low. You'd have to drop it down to the daily just to see. We got this selling pressure's been, it's gone from overbought to oversold. The selling pressure's pretty hard. Are we going to lift here off, higher than $4 around the 420 to 430, or are we sort of lifting here and then we get that secondary blast down to $4 and retest it again? Who knows? It's just the fact that we've rejected that breakout of the highs at say 525 to 530. We've rejected that quite significantly. If that was a strong market, again, it shouldn't be. We shouldn't get this kind of rejection. We should get from overbought up here to oversold, but hold up at a key, not a key level, but hold up significantly higher than where it is at the moment. Does that make sense? So if we just get into the daily, if you're looking for a buy potentially, let's just see what the daily is saying to us. Look, that daily could be, just remember we could potentially come off. What's going on here? The one thing is that you are getting it extended on the daily, on the weekly, don't forget. So that extended is somewhere around here. If we just try to build that trade, okay, there is potential that we are holding up. So from here, I would like preferably, you can see that we're broke. We could just be contracting through here because again, that's your anchor at 460 to that downtrend. We could just go boom, 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 sideways, up, down, up, down, up, down before we start holding a lower high and then straight down through 420. Or we could just range trade. We could be stuck in that sort of range between 420 and 460. But ideally, what you'd like to see, what I would like to see is it break up through 460. We just take a few steps back. Boom, 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 boom. I would like to see, we haven't quite got there yet. So we've gone down. I would like to see it pop up and then maybe a little corrective action at 1-2. And then I'd look for an entry off a sort of a clear higher low. But I would love to see that broken at 460. Then, if you're looking at purely from a range trade, then you could be looking right up to 570. It's not too much. You've got a little bit of resistance at 480, so that you might find that comes into play, or we blast straight through it. And then from there, really, you've got a few gaps that can close. You really don't have too much up until 570. Does that make sense there, John? I hope that makes sense. We'll get through that last one at MDC. But that potential buy on this daily chart is purely because that weekly chart is getting extended to the downside. When it's extended to the downside, it could take quite a bit for that weekly to start playing out, and then buyers start to step in where we are, and then grind its way up. But we'll see. MDC. Digesting TTS, all right. TTS, what was that? That's no T2T. I'll have a look at that TATS as well. Is it TATS? What do they do? All right, you're a bit different there. Let's look at the weekly on this one. All right, so it for me, maybe that was just the start of the year, just that big sell-off because of what's happened in the US. What I see with this one is a bit of the same. We're just going to the weekly to get our bearings. The good thing is there's a key at 50 cents. We've got that push up through this move here. See how it had a deeper correction? It didn't get too far through the highs. You got back down. It tried to go lower high. It sent all the way back down. And then that was a beautiful little trade if you could have got on board off this high low, even through here on that green candle, bang up. We had another opportunity just in here, and that led to a push right up to $1.20. That's probably a good one just to whack in the. If everyone does it, I know I do. I might save this one as a bit of a go down to your dailies and just mark up some of those trades. It's mainly off this corrective action lower. So just remember when the market can't take out the highs, you can see here it's gone up 1, 2, 3, good leg up. We're asking it to do a third strong leg up. Instead, it's just broken through the highs. When it does that, and then you get selling pressure starting to come in, that's not a good sign. And the market just has to have a deeper correction, but it's all in context of this major move up, this major leg up. Right? It has to have a deeper correction, reset itself at lower levels just to clean out a few of those buyers. And then it built again. It had this good leg up to 120. What we've done since is really, I'll change colors, it's getting messy. We've had a good pretty much capitulation straight down to 50, and we've just bounced off 50. We've reacted off 50. So to find out whether this is a buy off a double bottom or this is a major higher low at 50 cents, what does that take us? No, nothing near it. I'll take a step back from there. I think it's got to put in a fair bit of work for me. If you go back down to the daily, I wouldn't buy it purely. I want to see, ideally, what I'd love to see is, if I'm willing to buy MDC, is hold around here. So we've got a major support around 50 cents. It's reacted off there. If we can hold these highs, maybe just sort of chop around, and we've pushed up, maybe do a bit of this, just clean out a few people with a move down through 62.5, but not, not a significant move down, and we start to hold a higher low. That's when I'd ideally would like to buy that, because you've got a major double bottom here on a weekly chart. We've got all this room to move on the way up, all the way to $1.10 at least, $1.20. That zone up here, off this kind of action, it could be quite nice as long as it holds up here. I wouldn't want to see this. It's got a bit choppy up here, and then boom, straight down and big capitulation down. That's not very conducive to strong market. It could all the way back down to 52, 50 zone. Really head back down there. So I would like that pressure. If you go from overbought to oversold, we head down to that oversold, but it hold up at higher levels. Because if it holds up like this, it goes from overbought to oversold this whole period, then it's actually quite strong. You've got to remember there's selling pressure. They're trying to push it down. They're trying to push it down. Buyers are meeting it with equal pressure, even a little bit more to build that higher low. They're starting to step in a bit with a bit more conviction. And then if that's the case, we go from down to sort of that oversold zone, whether it's 20%, whatever, down here. And we're showing this, we're holding up at that 65 to 70, even above 60, a 50% retracement of that move up, holding that sort of top half of that move, then I think that's going to be a nice little move up. And then you could sort of just go from, say, 50 up to 70, 20 cents. You add that to 60, you could be looking up towards 80. That would take us up to sort of that key zone. It's still a 2-to-1 sort of top of a trade. It could be, or it could just blast up through 80. But we'll see. So anyway, that's that one. It's not set up yet. I wouldn't just go and buy at current prices, because it could easily roll over, take out 50. It could just, and then again, you're stuck holding something you don't want to hold for a long time. Quickly look at TTS, TATS. That's obviously a lot better. It's come straight into that 470, but the longer term, it is holding higher levels. I wouldn't even bother looking at the daily because it's extended. This move up is extended up here, but it is coming up. It is up into that 470. So I'd expect some sort of reaction lower off that, whether it pops up. And if it pushes up through that previous high, I wouldn't expect it to go too far, 5 or 10 cents before we react lower, because this leg has come right off 390 without really that look back. From here, if I was going to get long on this, I would prefer it to be at lower levels, because this is your trend up. That's your trend up. It's respecting that move. Last time it respected, it was back, I don't know what date that was, somewhere around end of August. Yeah, end of 2017. So I would ideally, we've had that move down, say off that 380. That's a 380. We've just moved up without really looking back, straight up into, say, towards that 470. I would like to see this again. It's this two-legged correction, but coming to a point where it could be just that 50% retracement, and then I would look for buyers starting to step up. Because if we retrace 50% of this move up in 2 stages, it's not a bad little sign. It's a sign that maybe somebody's building a position off that 470, a major position, expecting, and their average could be around 440. They're expecting to push up to $5. They might have a 2-to-1 sort of risk reward they're looking at, and then just see how it goes from there. But yeah, that one, like I said, I wouldn't, looking at that daily, I wouldn't touch it. It's overbought on both the weekly and the daily. I want to see some heat come out of that market. All right, I think we might have to call it a day there, guys. Thanks for joining me. I hope everyone, that made a lot of sense at helping, we're getting somewhere. It's helping out quite a bit. But yeah, thanks for joining me, guys. We'll be back in on, Monday.
So I hope you all have a good weekend. We'll see how this market plays out the rest of the day. It's still holding lower highs just on that intraday. So we could be seeing some lower levels where we're only up 10 points. So we've given up about 30 to 40, 30 points or so from the highs in the XJA. We'll see how that plays out. Yeah, have a great. Cheers, Bobby. Thanks for your likes too, Bobby, on what is it on Twitter? It's great. Spread the word, guys. It's always good. Um, yeah, thanks for joining me. We'll be back in on Monday. Have a great weekend. Cheers. Bye.